Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the market, that is the crypto market, the NFT market, and how to make some or hopefully a lot of money on the internet. Loaded up for discussion today, we have the markets bouncing back amidst some global tension as BRICS consider joint response to Trump tariffs. But Trump is also planning to sign an executive order to allow private equity, real estate, and crypto into 401ks. We'll discuss that and the significance in just a moment. We've got Tom Lee doing his very best for ETH, saying that it can flip Bitcoin and that zero downtime is what Wall Street cares about. We'll dive into his very significant set of interviews that he's been giving, very prominent fund manager, really bull posting ETH. And we've got some news on Ventuals going live on Hyperliquid testnet to trade tokenized private market stocks. We think that's very interesting. Maybe not super significant yet in terms of headline kind of material, but it's very, very interesting. So from that perspective, it's almost like a little bit of research for us. We've also got the latest on price action on crypto and NFTs as usual, and a general discussion on where we think attention is flowing. So stay tuned for that. I've got Legendary in the co-host seat with me today. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice, because this market, although it keeps going up, we don't know that it will continue to do that, although we'll give some thoughts in that direction. It is risky. We don't know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Thursday. It's the 7th of August. How are you doing? How are you feeling?
Jim, I'm doing pretty well. Interesting things are happening, which is that I'm buying JPEGs again. It's not gonna lie.
Oh no,
kind of weird.
No.
Not
You swore off this, Legendary. You swore off it. You don't do that. That is not something that you do anymore. Why are you doing that?
I picked up a couple little pudgies.
Why? Why?
There is no strong thesis behind it. They just looked cute. And I also did another thing related to the pudgy penguin ecosystem. I was very vocal about the fact that on the day that I got my penguin airdrop for my big ones,
Yes.
I sold all of that.
Yes.
The minute I got it,
yes,
I bought a fair amount back yesterday.
Okay.
And I'm holding that on abstract.
Oh, you're holding it on abstract. Maybe I need to move my Pengu's on Hyperliquid at the moment, I think. Yeah, I'm holding a bunch. I've been trading in and out of Pengu. I think it's one of the ones to certainly, if you're bullish the next few months, Pengu above all is one of the memes to believe in. It's barely even a meme at this point, right? It's just an incredibly successful IP. On the little pudgy though, Ledge, it's undeniable how cute the little pudges are. Like, I don't think there's a cuter NFT. So from that perspective only, I understand the purchase, even if I don't know if it's a warning sign that you're back to NFTs after being away from them for so long.
I still need Magic Eden to introduce the lucky buys for more expensive collections. Although I'm not gonna lie, it feels extremely degenerate because I did spin for my little pudgies yesterday.
You were spinning for them?
Yeah, and to do like spins with like a quarter of an ETH each feels a bit degenerate to do that.
I think so. I would agree. I would agree that is a bit degenerate, and maybe a sign of the times. Maybe we're tracking that as one of our indicators for where we are in the market. So we'll keep an eye on Legendary's lucky spins as part of the general assessment of where we are in the market.
You know what that reminds me of? And I might have the chance to do it throughout the show so I can report on that. Magic Eden dropped the season 2 airdrop overnight, and obviously I have like more than 200 spins because this is how I buy the bad buns, right? I haven't checked my wallet to see how much I am supposed to be claiming, so I will try to squeeze that in.
You got to put a tweet out about that. Maybe you get like you are fully refunded, and I think you're probably up on your buys anyway, but maybe you get like a nice stimulus there, so that'd be interesting to see. Good stuff. So as usual, we've got a whole load of important things to talk about today. The market is green as well, so that's always nice. Let's get into it as usual to get you up to speed with everything that you need to know. Bitcoin is up 2% to 116.4K. ETH is up 5.6% to $3,819. XRP is up 4.5% to $3.07. BNB is up 1.9% to $777. Solana is up 5% to 173. And our favorite alternative majors, we got Hyperliquid up 5% back to $39, and Sui up 8% to $3.66. So all good news on the major front. Getting into the meme coin side of things, we have Dogecoin up 6% back to 21 cents. You've got Pengu up 12%, Pepe up 5, Bonk up 7, SPX up 8 back to $1.80. Fartcoin's up 4, but still struggling to get back over $1. So all things considered, Fartcoin's really struggled in the last period of time, down at 8%, although that's actually not much more than any of the other memes in the last week or so, because everything's down still on the weekly time frame, or more or less. One thing that is not down on the weekly time frame is Rect. Rect is up 15% on the week and up 12% on the day. Today, going to all-time high, we are now at around, oh gosh, we're up even more since I last checked this morning, 560 mil FTV. Pretty insane from Rect. We've been talking about it for a long time on the show. We are both incredibly exposed, but the coin just goes up at the moment. Pretty impressive performance. Getting into the headlines themselves, we have, let's see the headlines themselves. We've got market bouncing amidst global tension as BRICS consider joint response to Trump tariffs. We also said that we'll talk about Trump's decision, or apparent decision, that there's going to be an executive order to allow crypto, amongst other things, into 401ks. So we'll dive into that. We've got Tom Lee talking about ETH flipping Bitcoin. So that was in one of the most incredibly bullish interviews that has been given. He's really on his podcast interview tour at the moment. Bull posting the hell out of ETH. And finally, Ventuals goes live on Hyperliquid testnet to trade tokenized private market stocks. A lot of interest in that kind of private market equity. So for that reason, I think that is very interesting. Just a final point on price action. Already mentioned Rect, already mentioned Pengu. Useless bounced 13% today. Remember, yesterday was a bit of a war. Useless sold off a ton, and Troll like completely ripped. Whereas, and because I think Troll was one of the ones that was mentioned by Alon, the founder of Pump Fun. Useless is obviously a bonk ecosystem coin. So now Useless kind of corrected back up. Troll went as high as 200 mil yesterday. Remember, I said I was in that at 20 mil, but was way too impatient. But that actually pulled back 8% today, so that's back to 160. Still an incredible looking chart if you look at it over the last few weeks and last few days. So that's on the price action. Ledge, is there anything we need to know on the NFT side, as ETH is incredibly strong at the moment?
You have this one, this Fidenza sale, and it's not the only Fidenza that sold over the last 24 hours. There's actually 2 more that sold, all between 41 and 42 ETH. And I do think that this is the more interesting story when it comes to NFTs, because the majors are not really doing a lot. Pudgy's up 1%, Bored Apes are down 1%, Miladys are basically flat. There's not too much. Azuki's up 1%, Doodles are down 1%, not too much movement going on the major collection, so nothing of interest to add there.
Okay. Definitely noting, though, that it wasn't just one Tyler Hobbs that sold for 42 ETH, and it was actually like an interesting one, like this big red one that we've got up on screen at the moment. There were 3 Tyler Hobbs sales, one for 42, one for 41, one for 40.95 ETH. So, that's not $40,000. That's 40 in the region of 40 ETH. That's pushing 150K, right, at these prices. So always like to recognize when the top end of the art market starts to really move. Remember last week or so, we had a big run on Squiggles, one of the original Art Blocks collections by the founder of Art Blocks. So, just noticing that people are feeling rich. I think that's the biggest indicator of what this is. People are feeling rich now, and therefore they are spending. And so if you have valuable assets which you either want to move, I wouldn't say this, I'd say this is a good time. If you have like high value art, which you are looking for a time to move, sure these things can go higher, but you want to take the liquidity when it's there. That's one of my thoughts, especially for these slightly more illiquid assets in particular. Okay, the rest of the roundup, a bunch of interesting things. China reportedly testing out stablecoins on fear of capital outflows. That was reported by the FT. So that's pretty significant. Backed plan to buy 30% stake in Japan's Marusho Hotta and rename the company Bitcoin.jp to pursue, of course, a Bitcoin treasury strategy. Parataxis Holdings said it is merging with Silverbox Corp to gather 640 mil for a NYCE traded Bitcoin treasury company. Nasdaq listed Cosmos Health enters $300 million facility for an Ethereum treasury strategy. So, as usual, as it has been the case recently, back to back Bitcoin treasury companies, Ethereum treasury companies is always in the news at the moment. In something slightly different, Tornado Cash developer Roman Storm found guilty of unlicensed money transmitting conspiracy, but not of conspiracy to commit money laundering. Remember, this is the fund mixer, Tornado Cash, where you can kind of put your funds in and get them sent anonymously to another wallet that you control, so people can not really trace your funds. This is the case going on in the States at the moment. Nomura-backed Laser Digital receives permission to roll out crypto derivatives in Dubai. Bob raises another $9.5 million in additional strategic rounds to have a total of $21 million raised to build the gateway to Bitcoin DeFi. I do like keeping tabs on Bitcoin DeFi, to be honest, just to see what's going on, although I'm not sure whether it feels like Bitcoin DeFi is happening in a lot of other places too now. So definite no guarantee that Bitcoin DeFi will happen on Bitcoin. Michigan Retirement System Pension Fund has almost tripled its stake in ARK's BTC ETF. That's interesting to note. Led, you'll like this one. Pudgy Penguins announced collaboration with Ava Studio to allow holders to create viral AI content of their penguin with the Ava Studio. That's something I want to play around with my Pudgy Penguin, to see like what you are able to create with the AI Studio. Sup Foundation announces $20 million total raise with Series B funding to bring Super Gaming's 200 mil lifetime players on chain this fall. This is super interesting. I had a call with the founder the other day. This is one of the biggest gaming studios out in India who are doing some incredible things. In India's market, I think, is entirely underrated. They are a huge community of gamers, and they're doing some pretty significant things in the next quarter or two. So I'm going to be keeping an eye on that. Artblocks announces the coming conclusion of the Artblocks 500, the first 500 pieces in the first chapter of Artblocks generative art history. I think that's a cool framing. People are trying to figure out how to frame these first set of Artblocks collections. A lot of the interest and price action dwindled away as there became kind of an oversupply, but talking about them as the Artblocks 500 maybe over time can create like a little bit of a community around all of the pieces and protect, kind of create some type of set for people to collect. So that's something to note. And then finally, as you said, Magic Eden distributed 10 million ME airdrop as part of season 2 rewards yesterday. That's the roundup. A lot of bits of news, some of which are more important than others. Ledge, before we get into the main stuff today, what's kind of catching your attention from the other bits of news?
There is one chart that I want to pull up, which is connected to the BTC treasury companies. And I think it's an interesting one. It shows the distribution of Bitcoin over time. The chart that I'm sharing on screen goes from July 2020 to July 2025. So we are covering the last 5 years. And what we can see is how the segments of who is owning Bitcoin have massively, massively changed. And basically, you could see that in before July 2020, it's like March, February, May 2020, you had mostly, that's obviously apart from like people just holding their BTC in self-custody, some funds, it's the same color as ETFs, but ETFs weren't around back then. So it was other funds holding that, a very small bit in smart contracts, a bit in public companies as well. And over time that has shifted with actually more I don't want to call it adoption because it's often seized Bitcoin, but with more Bitcoin holdings increasing on the governmental side, but slowly also public companies getting in there. And then it was only really in September 2020 that we've seen a notable uptick in private companies holding Bitcoin. And that's the interesting development to me, is that from basically January last year, the sectors of private companies, public companies, and governments have simply been exploding. And of course, ETFs, now that they're a thing as well, and they're added in the same bracket with other funds, are growing very, very strongly. But this increase, especially for the public companies, which has been like pretty much constant from 2021 to 2024, is massive, and it's becoming the biggest sector almost in private companies and governments together, which is
That's fascinating.
hugely driven by Michael Saylor's strategy.
Sure, of course. This is a fascinating chart. So just as a reminder, all of these charts and data sources that we like, we put in a section called the best information in our Telegram. So there's a whole section there which is designed to make sure you don't have to have 100 tabs open all the time, because you know that you can just go to that section and click on the thing that you need, whether it's swapping, bridging, whatever, getting some information source. We're going to constantly keep updating it to make sure we have the best stuff. But that's fascinating. Ledge, could you just pull it up again? Because it's something I wanted to ask or see. So this blue one, so that light blue color was basically was non-existent before.
Yeah, just a very, very tiny sliver. So like it was like 35,000 BTC as of 2022. That was a tiny sliver, and now it is 290,000.
Interesting.
Okay,
so pretty significant moves there. This is good, and so this website is included in our information section. Very interesting. Okay, so we like that. I think that is a helpful data point to point out. Anything else catching your attention here, Ledge? I know we've spoken a lot about treasury companies in general. What about the stablecoin side of things? One thing that we have been very bullish on is plasma.
Indeed.
You know, in the news today, we had China reportedly testing out stablecoins on fear of capital outflows. There was actually a piece of news the other day where in South Korea, the ruling party and the bank are in opposition with each other, because the ruling party want to allow people to like create more types of stablecoins, and the bank is saying, no, we do not want you to be able to do that because of this capital outflow fear. And I think increasingly what is happening is, I mean, I think this is something we've been very attuned to for a long time, but what people are waking up to is the recognition that more stablecoins means less money in traditional banks, and it means, and this was articulated by the ECB, the European Central Bank, just in the last couple of weeks also, they do not want the dollar stablecoin to be the world's most important stablecoin, because it means that they're desperately scared that they are going to be a net loser in that trade-off, because people are going to prefer the dollar over the stablecoin. And this is something I've been saying for years. Actually, this is one of the first things I understood about stablecoins. What stablecoins really shows you, as in this is already the truth. There is no debate about this in my mind. The dollar, whether you think it's a piece of trash now and you'd rather have Bitcoin, that's kind of a separate issue. In terms of fiat currencies, there is no other currency. If there was, there would be a stablecoin with a meaningful market cap behind it. And so you could say, okay, fine, the euro is there, it exists. The pound, I don't even know if that exists on chain. It's because the pound is useless and it has no significance in the world anymore and will not have significance again in the world. And so, okay, fine, the euro is there a little bit. Maybe China is looking to bring something on chain as well. But in the end, when it comes to a fiat currency on chain, the dollar is all there is. It's going to suck everything out of all the other foreign currencies. And I think that's what everyone is. I think it took the Genius Act to pass for everyone to just realize that, oh, wait, this is actually going to happen now. And now we are incredibly under pressure. Curious for your thoughts in that direction, and what that might mean for like investment opportunities, like how to capitalize on that idea?
Yeah, I think other countries, the EU especially, have to come up with something if they want to have a piece of that stablecoin economic activity, with ways to foster euro stablecoin adoption, other currencies adoption in a meaningful way ultimately, because you'll always have this consumer preference of operating in your local currency and just not having to worry about FX risk. And regulation needs to become more global as well, right? Because if you look at the EU regulating stablecoins, they're saying that it's either 40 or 60%. They always mix those two figures up of reserves of a specific stablecoin that is to be brought into the market in the EU have to be held with European banks, and that's the reason why Tether has no interest in moving $100 billion into European banks to do that and be compliant with that. And then if you have like multiple jurisdictions with similar regulations, then you will have to have over collateralization, right? You will, if two jurisdictions tell you have to have 60% of your stablecoin market cap held with the respective bank, then you need to over collateralize, and that's not very feasible. But the other thing I also wanted to comment on, and it's going to be a little guessing game for you because you mentioned Plasma. So Plasma is this blockchain that is focused on Tether specifically, Tether, which has reported $4.9 billion in Q2 profits a couple of days ago, has basically a couple standout features for that chain, and one of which is that USDT transfers are happening at zero fees, at zero cost, exactly. And now the question is, if you take, and that's an analysis done with Chainalysis data, if you take 9 significant blockchains that they looked at, I'm going to tell you which ones they are: Ethereum, Tron, Toncoin, Solana, BSC, Avalanche, Arbitrum, Polygon, and Optimism. What is the percentage of total blockchain fees on these blockchains that was paid to send USDT, that was paid to send Tether around?
I saw this number earlier, but I can't remember what it was. Isn't it like it's disgustingly high?
It's 40%. Look at this.
Yeah.
So I'm sharing the chart again. It starts in January 2022, where it was like 5%. It's a 7-day moving average, by the way. It's not on individual days. It has been climbing up. It did spike once in October 2023 to around like 35%. It had another spike in 2024. Massive drop, but now we are back to these 35, 40-ish% levels of fees just being spent to send
moving Tether
around. Yeah. So this tells me that there's going to be a massive incentive to move those Tether flows to Plasma.
Yeah. So, and that has 2 consequences, right? One, it increases Plasma TVL by a huge amount, because now, why would you move Tether on any other blockchain if they're going to charge you something, when on Plasma you do not get charged? And the second thing is, it sends a lot of those other networks' activity to zero, potentially. I think that might be like a simplistic reading of the situation. I think what the reality is, in a lot of these regions, some of the chains that are most active in there, say for example Tron in Latin America or something, they've really built out the network in a way, and they've built out apps. Like, there are apps that help facilitate all of this stuff. And so in order to penetrate those markets, I think Plasma and whoever else, because it's not just Plasma who are doing the USDT chain, right? Like, I think there's also Stable that is coming to market relatively soon, backed by some prominent people also. So, in order to get to the user, it sounds like the future is going to be apps as well. So it's not just, blockchain users clicking buttons on their computer like us super crypto native people. You're going to need to get in front of, you're in the business of payments now, and payments need to be easy, straightforward, and they need to be maybe mobile centric, maybe as well, because that's where the world is going. So I think that is how I'm thinking about it. I'm still incredibly bullish on Plasma, which I believe has just a personal view, is that it has a head start on Stable. I don't know as much about Stable. It has a head start on Stable. I think that So, and the latent demand has been demonstrated by the raise, where there were 320 mil oversubscribed from the amount that they wanted to raise. They wanted to raise 50 mil at a 500 mil valuation. They had 370 mil at that moment in time. So I think that latent demand is really, really there. So that's my thought there. Just quick shout out to Mutasco in the Twitter comments, sharing some commentary. I don't have any information here. Some commentary on the desire. I think this is the president and director of Barclays Bank talking about stablecoins, potential solution for the demand that there is in a lot of countries for customers to hold a less volatile currency. This is the thing. The world's not entirely ready for Bitcoin, I don't think. When they're looking at their own currency versus the dollar, all they ever see is that it's going down. And so stablecoins are really going to help in that direction. So I think it's going to be very, very well adopted across the board. Thanks. If anyone wants to read that, it's in the comments on the Twitter Spaces if you want some more detail. Ledge, anything else there?
Nothing to add on that, no.
Okay. Well, before we get into the headlines, which we will do in a moment, I just wanted to talk a little bit more. We've kind of been talking about how the market's up a lot. The expectation is that the market is going to be moving forward, going up much more, over the next quarter, the next 2 quarters. Prominent traders, Bob Lucas and Nexus, I've got this tweet to pull up, have been speaking about locking in a new financial level in the next 6 months. The question really is how do we do that practically? So in this tweet that we have here, Crypto Nexus quote tweeted another tweet to say, one of the most impactful things I've read on crypto Twitter was from Degen Spartan. Degen Spartan, if you know, legendary crypto Twitter personality, no longer posts on crypto Twitter, unfortunately. But what they articulated was, they talked about securing new checkpoints in life as you increase your net worth, so that if you ever have to restart, you're not doing it from the beginning. Withdraw constantly. Ledge, that's one perspective. How are you planning on thinking through the next 6 months from your perspective?
Absolutely, yes. I think I'm going to basically replay what I did at the start of the year, which was, as the first 2 or 3 months progressed, just constantly taking chips off the table, probably with a different strategy than yours. You are very, very systematic when you're DCAing out of stuff. I'm a bit more vibey when I do that, but ultimately we try to achieve the same thing. And I like this concept of locking in certain checkpoints, certain net worth checkpoints, which makes a ton of sense. And for me to do that actually means to try to move it into fiat these days, because even if I move it to another wallet, to a wallet that I can't access from home, which I think is a very important OPSEC concept, to make sure that you can't access all of your funds from home, by the way, but to actually move it out of the system and have it in fiat. Ultimately, I do have stuff to pay in fiat, including taxes, my apartment, etc. And that now has added so much, I would say, mental ease and so much like comfort to do that, because it's something I've never done in the years before. And I've been in crypto for 9 years, and I had everything there. And I used to just move it to another cold storage of mine, but not actually take chips off the table. And I think that for me, the time frame to look at is still towards the end of the year, where I want to have more in stablecoins. The only thing that has shifted is that I'm now also way more comfortable, because I had reached a certain checkpoint that allows me to do that, to not move everything I want to take out into fiat, as I just said, but just increase my BTC exposure with a horizon of the next 5 to 10 years to hold it for a longer period in time.
I like it. Okay. What about a question on how do you think about it for different portfolio sizes? Like, obviously everyone is working at different levels. We were at all the other levels beforehand. Like, I think I came in with a couple of ETH back in 2021 and was buying NFTs. And if I wanted to buy another NFT, I had to sell one NFT to get a different one. And so I was always trying to make those decisions. So how are you thinking about it for maybe a 4-figure portfolio, mid 5-figure, 6-figure? Like, how does things change?
I think the lower your portfolio size is, the less sense it makes to just rely on stacking BTC. Like if you only have 5 figures, you don't plan to add more into your crypto capital from an outside income source, whatever that is, and then you hold Bitcoin from 116 to 1M, you'll move from 4 to 5 figures. And again, if you plan to DCA in when you actually work, have a job, a business, whatever, you're DCing into Bitcoin, it's a completely different situation. But if your entire portfolio is 4 figures and that's the capital you have to play around with and you don't plan to add more reload, then I wouldn't stack the majors with that, because you won't have a significant impact on your life if you move from, I don't know, 2K to 20K. It's a lot of money nonetheless, but it's not probably the amount of life-changing money that a lot of people envision when they come into this space. So I think if I had to operate with a portfolio of that size, my focus would be to use a good part of that to try to farm airdrops, but in a way that doesn't really take an exposure to the most degenerate coins where I can lose it all. I think back in the day when we were running airdrop season and we had all those guides, for example, on Arbitrum, and help people to tick off all the criteria that were obviously published ex post on Arbitrum. Those were like 4 or 5 figure airdrops that you had, and you didn't have to take a lot of directional exposure, sorry for that, to achieve
Most
that.
people got 5. If anyone did it with us during the bear market, they got 5 figures.
Yeah, 10 to 20K, I think, was like the range. And without, you could do that on a low budget. Yes, you were burning a couple hundreds in transaction costs if you really wanted to go for massive bridging volume, and you couldn't do that in one big clip, so you had to like do it with maybe hundreds of transactions or so, but obviously very lucrative. I would still keep a very, very small part of that mid 4-figure portfolio for like very risky plays, and to have the potential 10x in there, but I'd really be very strict about that. But because at that level, you just can't afford to lose it all with 3 trades if you can't reload, obviously. With mid 5 figures, I think airdrops are still an interesting and important thing. And I think this is also the part when you can begin the airdrop farming in the way that you like to describe as lazy farming. So aka that is letting your capital work for you. It is putting money into stuff like Liminal or whatever you find interesting at the moment, and having, I don't know, having 10K in there, and hoping to achieve a nice yield from that. And that already can accumulate into 6 figures, gives you a bit more flexibility with trading memes, trading alts, trading JPEGs, whatever you want to do, wherever you want to position yourself on the long tail. And then the I don't know, like low 6 figs to mid 6 figs is probably is where I think then stacking up on BTC and using that, stacking up the majors, using these assets productively, also using them to farm airdrops. This is where stuff accumulates pretty quickly. And the journey from 7 to 8 probably doesn't change too much, I would argue. And the journey from 8 to 9 figures, that's something that I can't report on from personal experience, obviously, because I'm far away from having to think about these kind of problems. But I spoke to people, and most often the answer was, that's like, if you want to go from 10 to 100 million, you have to actually build a company. You have to do something. Doing that of trading in crypto alone becomes, at this point in time, incredibly hard.
I agree. I definitely agree with that final sentiment. I think building is long-term. If you can be long-term oriented enough, and if actually, maybe that's the final thing. You dealt with the details. That maybe the final thing I'll leave people with is, if you can be long-term oriented enough and you're going to commit to the industry so much, do something beyond just the financial trading. I think there is a real beauty to being able to trade in the background and just make money. It's like a magic power to not have to rely on anyone else and just place a trade and then make money 1 month later. However, building something simultaneously, letting your equity grow as the world inflates all the dollars away, it means your equity is going to be growing as well. And you're in an environment where crypto equity specifically has suddenly become the hottest type of equity in the world because it was never allowed to be on the market before. So my prediction for modern market equity is that it's going to be incredibly valuable in the future. My prediction for any crypto equity in the future is that it's going to be very valuable if you do it well and if you kind of commit to it. So I think it's a huge opportunity in that respect too. I agree with it. So I thought that'd be a helpful little reflection for people to maybe start planning the next 3 to 6 months, because when things get crazy, it's hard. It's good to have a plan as part of it. And of course, we'll be here all the days to discuss as usual. Let's get into the main headlines though, to get us into the main news for today specifically. First piece of news is the market's bouncing back in a very nice green move. The BRICS are considering a joint response to Trump tariffs because he's been getting a little bit loud about that. And there's been some good news on Trump signing an executive order that will allow private equity, real estate, and crypto into 401ks, reported by Bloomberg. So what do we need to know here, Ledge? What's the significance of these two bits of news?
Absolutely. Let's take them step by step, starting with tariffs first, to give you a bit of an update of what has been happening. On that front, we have the White House placing an additional 25% tariff on imports from India, bringing the total tariff rate up to 50%. India has then 21 days to respond to those potential tariffs before they go into effect. And the President Donald Trump also had very, very strong words to say on that, especially on that threat, which you mentioned from the BRICS states being Brazil, Russia, India, China, South Africa. I don't care what India does with Russia. They can take the dead economies down together for all they care, is what Trump had to say on that. So definitely the tension rising when it comes to that part of the tariff conflict. But the market, which was stagnating yesterday, as we reported on that, wasn't too preoccupied with that anymore today. And I think it is to do with exactly the thing that I pointed out yesterday. Yes, the market still does not like uncertainty, but we're getting more and more used to that rhetoric. And then to the other point that you mentioned, which is to do with the executive order. The claim there is that Trump will sign an executive order on Thursday that aims to allow private equity, real estate, cryptocurrency, and other alternative assets into 401ks. That comes, as you said, via Bloomberg News. And it's something that we covered a couple of weeks ago. And I think that significance there is that this is a, $9 trillion quote unquote market size of money that could flow into crypto. Obviously, that doesn't mean that everyone's going to put 100% of whatever they have into their 401k into crypto tomorrow, and we're going to have a God candle that's going to print for everyone. But if it becomes a healthy habit to have a 2 or 3 or 4 or 5%, whatever allocation of your 401k in crypto over the next years, over the next decade, that is a massive, massive boost for our industry.
Yeah, it's so huge, isn't it? I think that news in particular is, you just want passive flows. Like, think about flows more and more now. Obviously, one of the reasons ETH has experienced this incredible, it's not incredible as such, it's kind of just going back to where it should be, but at least one of the reasons why it's doing that is because of flows, because of these specific treasury companies having a mandate to go and buy huge amounts of ETH incredibly aggressively, almost in competition with each other, creating this unending flow of buying pressure. And so I guess one of the reasons everyone is so addicted to the stock market is because everyone is very, very passively contributing towards the stock market's growth over and over again without thinking. You press the buttons and you're buying whichever index fund, whatever tracker is available, which has been very much kind of received wisdom to do that with a portion of your money, so that you're just protecting your wealth over the long term. And so, the same thing happening for crypto would be, just to the extent I don't know if anyone is unsure that the price of Bitcoin will just go up forever. But and sure, maybe there'll still be dips. There'll still be dips as we go. But it was really just cementing the idea that, okay, this is an up-only asset, like the stock market was an up-only asset. Maybe it's not going to be as aggressive up-only as it used to be, although maybe in the short term there still can be, because it's still so new relative to the stock market. But it's kind of cementing its position long term to just be to get those flows. Anything else from you there, Ledge? Because I think that's, as you say, very, very good news. I don't think it's not going to be felt immediately, is it, by the market? But still very, very good.
I think a lot of people are still massively unsure that Bitcoin is an asset with a long-term upwards potential, because otherwise the market cap of Bitcoin wouldn't be that low relative to gold, relative to stocks. So even in our space, a lot of people don't have exposure to BTC. I mean, again, I said for some portfolio sizes, it doesn't really make sense. But if you plan to add more money to that and DCing into Bitcoin, even if it's a savings plan that has, I don't know, $30 a week or whatever makes sense for you financially, would be a good expression of that thought or of that bet. And I feel like that with just the, I don't know, S&P 500 market cap being at 50 trillion, obviously that's like productive companies doing something and not quote unquote just a financial layer. But still, just given those stats and the current price of BTC, there's still a lot of uncertainty about where this asset could go, because otherwise it would be already priced way, way higher.
Yeah, I think that's fair. Okay, so that's that headline. Need to get to the second headline today, which is, of course, our favorite Ethereum bull, Tom Lee, saying that ETH can flip Bitcoin and that zero downtime is what Wall Street cares about. Tom Lee, very significant traditional fund manager. He is now running, he's the chairman of BitMiner, one of the largest holder of ETH in the world, and with a mandate to go out and purchase more. He's been doing a bunch of, like, a roadshow of all kinds of podcasts and shows explaining his thesis, often not saying things that have not been said before. Like, a lot of the messaging about ETH is what we on Crypto Twitter have been articulating for a long time. Sometimes I guess it just matters whose mouth it is coming out of and who they are able to reach. And so, just to take a short summary from the interview with Bankless, from Ryan Adams, these are some of the kind of takeaways from the interview. He said, Tom Lee is moving 12 times faster than Michael Saylor, except he's buying ETH. He's serious about owning 5% of ETH supply. And at the rate that he's going at the moment, he'd hit 5% of all of ETH sometime in 2026, which is pretty rapid. That would be 6 million ETH, which is $20 billion worth at the current price. He's buying as fast as possible to lock in below $10,000. And he still thinks ETH still has 100x upside. He also thinks ETH could flip Bitcoin. If he's right on all of this, according to Ryan, ETH would be worth 40 trillion. BMNR would be one of the world's most valuable companies. And the ETH treasury companies would have a sovereign put. The US government might need to acquire their assets in order to set up a public ETH treasury. These were some of the key kind of takeaways. In addition to that, I saw some parts of the interview and thought it was significant that the fact that he thought that ETH had zero downtime, and that is one of the things that Wall Street values a lot. That was like a kind of older message that people used to say on Crypto Twitter. Now Solana is obviously pretty performant as well. I don't think it has anywhere near the number of issues that it used to have, but it's obviously kind of rehashing that argument that dependability matters to Wall Street. And he went on to say, I think that Wall Street has already decided Ethereum is the chain they're going to build Wall Street onto. So I thought that was a notable extract as well. So those are some of the takeaways, Ledge. Curious for your thoughts here on if you agree with any of these like outlandish statements. I think one of the things he said was that ETH could go to 16K like this cycle. And it's kind of having the Bitcoin moment of when, people wish they bought Bitcoin under 1,000. Now it's 100K. And it's like, well, ETH is 3K. So, don't miss the same type of move. How much of this do you buy? How much do you think of this is realistic? What's your perspective?
Let's go through the individual statements one by one, I think. He's dead serious about owning 5%. Yeah. I mean, he has 0.69% of the ETH supply already, more than $3 billion, 3.2 that is at the specific price level. Absolutely buy that. That ETH can go beyond 10K, ETH doubling up at some point in time, a bit more than doubling up, could see that happen. Now, the big one, 100x upside, ETH worth $40 trillion. Again, I just said it. The S&P 500 is at 50 trillion. That's like 500 largest American companies that actually are the backbone of the publicly traded part of the American economy. Obviously, small brick and mortar companies are hugely important as well. But from the publicly traded part, they would be basically at the same value as ETH then. Obviously, that's a question of time horizon. If you say that the stock market grows by 7% on average, and then you say, I don't know, at some point in 50 years, ETH would be at 40 trillion, but the stock market has inflated by then dollars, has continued its inflation route. Yes, it could be possible, but not on a like short-term realistic time horizon. I wouldn't see that. On the other hand, we see some absurdities when it comes to valuations. And one thing I also thought I'd never see is that Nvidia is $500 billion away from being worth more than the Eurostoxx 50, which is Europe's 50 most valuable companies. So that could also happen. But just from the perspective of seeing that, and I know Wall Street again is more than S&P 500, I'm like oversimplifying things here, but just from his perspective that the tech layer that Wall Street is going to build his future on is going to be worth more or almost the same as the S&P 500 from today's perspective feels very absurd. So the potential route to 10K, yes, I do see that. ETH to 380,000. No, I don't see that. I mean, I'd be very happy. Obviously, I wouldn't complain, but I just don't think that is realistic on any sensible time frame. You are on mute.
Yeah, I think I broadly agree with you. I do think that a lot of the comparisons being drawn are intentionally with Bitcoin in order to try to draw people into the Bitcoin price action and story. And I think there has always been an argument that ETH could be bigger in the sense that it represents economic activity. The only drawback in all of this is that, okay, I know that a lot of the stablecoin activity has been captured on ETH so far, and that's like part of the bull case, and I know it's been super dependable. But I think a lot of activity over time has been siphoned off to other places, whether that is Solana, whether that is Hyperliquid, whether that is any other chain that is going to be launched soon that might continue to innovate. And I think smart contract platforms, smart contract, these types of chains where economic activity is going to form the basis of the value, they're always going to be vulnerable to new innovations in the same way that ETH was vulnerable to Solana. Solana was vulnerable to Hyperliquid. Hyperliquid will be vulnerable to something else coming after, although they did it kind of differently because they led with a product rather than just saying we're a chain, now you build something on top of it. And that's just an issue Bitcoin doesn't have. And I think, the digital gold narrative is one thing. The no downtime thing is very meaningful to me for ETH. It always has been. But if in the end, it just depends on economic activity. Like, will economic activity keep accruing to ETH? If it does, then I'm here for it. I guess just for a reasonable period of time, it wasn't clear if that would be the case. Although, if you think about it, I still think that blockchains are like cities. They all have their own culture. And I do think that Hyperliquid versus Solana versus ETH, thinking that those might be the main places that people might build out, okay, actually, to be fair, we've got to throw XRP and we've got to throw Tron in there as well, just because you can't ignore them. As people might say whatever they want about XRP, but like it is the third biggest asset. BNB's up there at 5 as well, right? So I'm looking at this and I'm thinking, which is the one with the best brand and culture for some of these corporates to get involved in? And I've always thought ETH would be a great spot for that. I'm going to say something crazy, but like, I don't think you can count out something like Ripple. I don't think you can count out XRP with the way that they have. They've got this enormous war chest, incredibly corporate, incredibly states focused. Could they win contracts in some ways to bring stuff on chain? I think they could. Solana will continue to be associated with the meme coin stuff. I know that they do other stuff too. I think they need to really pivot into that internet capital markets in the more positive sense, not the Believe app. I don't think that is going to be the thing that shifts the culture away from speculative meme coins to something more sophisticated. I think they need to do proper internet capital markets, and then they'll be in that conversation way better. But I think Hyperliquid is too, I don't know, it's very relatively centralized versus decentralized. I think they have awesome options for people to plug in and play. So if people want to access the markets, I think they'll go to Hyperliquid. But in terms of just building out, I kind of lean towards ETH. There's kind of a bit of a rambling answer, but just kind of going through each chain step by step. Curious for your reflections there, Ledge.
Yeah, I agree with that, especially the cultural fit at large. Definitely XRP is at what, $180 billion market cap, so that is still very, very significant. But as you said, don't necessarily see the fit with Solana or other blockchains for that sort of adoption. And the other thing we mentioned, and then I also want to hear from Funky, who had his hand up for quite a while, is the networking side of things. The Tom Lees, the Joseph Lubins of this world, who have a massive interest of see the ETH number, the ETH price go up, is extremely strong, and that's these days way more valuable than the number of devs or other things we used to look at in the past for as a sort of benchmark. So I mostly agree with what you said, but as I said, Funky, very curious to hear your take on our discussion so far.
Jim, guys, hopefully you can hear me okay because I'm on a plane. But I was just gonna say they've been talking about the flipping for like 3 cycles now. I just don't really ever see it happening. I think Bitcoin serves a very specific purpose that people are going to continue to pile into. But everything else you guys said, I completely agreed. And I just thought that your title today, I didn't realize there was somebody else had said it, but it just struck me as clickbait. I started laughing as soon as I saw it this morning.
Yeah, I think Legendary is in charge of those titles. Is a good one to get people, I think. Okay, good discussion. I think all of these coins ultimately look quite strong at the moment. ETH clearly very, very strong, and the recipient of all these excellent flows. So just looking from that perspective, pretty nicely positioned at the moment. We're almost at the end of today's show. Ledge, I think just touch on what we other people might not class this as a headline, but I think is an interesting point to consider that these private market shares are going to be coming on chain in some way. Do you want to just tell us briefly what Ventuals is looking to do on Hyperliquid? Because I think it should be on people's radar.
Yes, absolutely. What Ventuals is doing is bringing private companies which are not publicly traded yet, which don't have their own stock, onto Hyperliquid with perps and allowing to trade these with up to 10x leverage. And I do think that it's currently in testnet. You can already go to Ventuals, log in, test it, play around with some mock USDC and see how that works. So we're talking about companies like OpenAI, like SpaceX. And I think it's a very interesting segment of the market to tap into, especially with the most relevant or the most interesting companies in AI not being publicly traded yet. And with how difficult it is to get access to an IPO, I think we've seen that with Circle, we've seen that with Figma even, when people on Robinhood tried to buy Figma stocks before the IPO, and I think it was Cyrus who posted he requested, I don't know, 3,000, 30,000 shares, large amount of shares, and he got like one. So making this market more accessible and allowing to speculate on the OpenAIs, on the SpaceX of this world is very, very interesting, and is something that I'm personally wanting to play around with, because otherwise it's extremely tough to get some exposure to a company like SpaceX.
Yeah. Two quick thoughts from me on the private company stuff to be aware of, in my opinion. First, let's not, with stocks coming on chain, these things cut both ways. Like, this is an incredible opportunity for other people to dump on you. Like, you shouldn't be like stablecoins coming on chain, or the government being all pro this. It's not for no reason. Like, they need people to have US treasuries, because other people don't really seem to want them at the moment. It's not as easy to get people buying US debt as it was before, because of the kind of aggressive tariff stuff, as well as other situations with the US debt. So look, there's a reason for it. And in a similar way, it's kind of how I'm thinking about some stocks coming on chain. People are seeing it as an opportunity to sell to people, especially in a market that's, especially a crypto centric market, where people have so much money to spend, have so much money to speculate, so much appetite to speculate. So I think, just be mindful of the incentives at play, and just, watch how people do that, whether it's private shares or whether it's anything else. So, that's just one thing to keep in mind. And then the final thought on this stuff, I can't remember the final thought. So that is that. One interesting point on it, to be fair, is while we close, shout out to Oyster, who's always repping Solana in the comments. I'm always thinking of how to be fair to Solana when Oyster's giving us some additional stuff. This is pretty cool. The Meteorite Collective, which I believe is attached to Meteora in some way, announced just yesterday a new way to trade private company shares on chain. Pre-stocks is launching tomorrow on Solana using Meteora. So this is actually was announced yesterday. So this is going live today. This will be interesting to see. They said early traders will get a unique zero slippage window. After that, the DLMM setup will provide smooth trading. Pre-stocks is excited to be partnering with Meteora as the home for pre-stocks liquidity on Solana. So this is pre-IPO liquidity. I'm just trying to see here what kind of stocks that might include. Okay, I can't see them right now, but maybe tomorrow we can see what's available. The final point I was going to make is that when Robinhood
and OpenAI, for example.
Oh, it does mention OpenAI. Okay. So the final point I was going to make, and again, we need to do the reading of the terms and conditions of all this stuff, is that when Robinhood announced something similar for OpenAI, like pre-trading, OpenAI actually made a statement, right, saying, we haven't approved this. This does not represent like private shares in the stock. You're basically trading nothing. So I would just be like, you got to do the reading, and you got to be clear on what it is you are actually trading when someone tells you you are trading this thing pre-IPO, because you very well may not be. Like, so I think you've just got to do the details. You might be speculating on a synthetic something which is representative of nothing, just with SpaceX on the name. And okay, cool, you're speculating on it, but you're not actually holding the thing, right? So definitely keep that in mind. Ledge, final take on that. It seems like you found the pre-stocks thing. Anything interesting, or any final conclusion?
The volume is also going to be very relevant. Like, you have interesting companies in there as Kraken, which is bound to IPO later this year, which is one IPO I want to get in. But obviously all those numbers only then become meaningful if there is enough trading volume on that. Kind of like we had the whales market for various pre-TGE tokens with $1,000, $10,000 in volume, which is absolutely not meaningful. So, and then we had on Hyperliquid Pump Fund with hundreds of millions, and that was a very, very good tool to estimate what the token will do after the TGE. So very similar here, not only to keep the incentives in mind, but also to have a look at the volume that will happen, no matter whether that's on pre-stocks or On the other one, what was it? Ventuals that we just mentioned. Volume is going to be defining for the success of those products.
Indeed. Volume is what matters. So let's see where that goes when it comes to this kind of pre-stock trading venue. Guys, that's the end of our show for today. Hope you enjoyed it. As usual, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, and YouTube. And you can catch us on Apple and Spotify podcasts as well, if that's how you prefer to catch up. We will be back same time, same place tomorrow for the final show of the week. Hope you have a wonderful day. Thanks so much for joining us. Take care. We'll see you tomorrow. Bye-bye.